investing in property and now you own a property, but you don't know what you can claim for your deductions when the tax return comes along. And I'm going to debunk everything for you in this video. Hi, if you don't know me, I'm Alesha Masood and I'm a partner at TaxApp Accountants. We are located in Sydney, but we offer our services to clients across Australia. So let's get into what are some of the things that you can deduct, especially if you're new to property, it's your first time investing. I'm going to give you a list of really, really good and important deductions. And these deductions are also really important for you to provide to your accountant so that they can account and get you the best tax refund when tax time comes around. So, number one category is your management and the admin side of things to be able to put your rental property on the market and to find tenants for it. And in that, you can talk about or you can include things like property management fees, advertising for clients, any fees that you incur when you are creating the legal documents like contracts for your tenants. Those are all included, and the lease preparation fee and any admin fee that your property manager effectively charges when they are, giving you the information about the property or creating reports for you. Usually, most property managers, when they are managing your property, at the end of the year, they'll give you a beautiful rental summary. And with that rental summary, you can just pretty much provide it to your accountant. Lots of our clients do this for us, and it is really helpful. One of the things that I find that clients miss out on when they're utilizing their property manager, especially if they are paying for that service, sometimes they'll be paying for levies and fees and, council rates through their own account instead of getting the property manager to pay for it through the account that they have in there. So that's a really good hack. If you are paying for the property manager, make sure you're utilizing all of their services because they should be paying for the water for you and all of those, council rates and levies and things like that through the trust account they've got sitting there for you. However, all is not lost if you don't have a property manager. If you don't have a property manager, you may still pay to create a lease agreement, and that is again tax deductible. And you may still pay to advertise your property on a rental agent platform like realestate.com through a secondary party website. And again, that is completely tax deductible as well. Now, let's talk about the next category of deductions that you can claim. The next category is primarily holding costs, which means that the costs that you incur because you hold an asset such as property. And these include things like council rates, water charges, land tax, and strata levies if you are in an apartment complex or if you've got a community title. A lot of the times they've got fees like levies and things like that. Everything that you've paid in that financial year is claimable. So make sure you have all of the documentation ready at hand when you are ready to lodge your tax return. And you provide this information to your accountant. The next thing is anything that you do in terms of insurances. So this is where you get your landlord insurance, you get your building insurance, and a lot of the time, banks actually require you to have a building insurance if you get a mortgage on the property and any other insurances that you may get. The next part is about the maintenance and ongoing property management. And that is where you can claim things like gardening, not necessarily landscaping, but gardening, and pest control, cleaning, smoke alarm checks. The effect of this is to effectively make sure that the property is up and running, right? So anything to maintain the property, you can definitely claim. But there's a caveat. You cannot claim if you go ahead and change the whole roof because that is an update to the property. And we're going to talk about that at the end. So you cannot claim anything that is an update to the property. Another category is the interest. So any interest that you have when you borrow the funds for the property is claimable, whether you get that interest from your home loan or you have it on your property. What I mean by that is, for example, if you have a home loan and you take out a bit of equity from that home loan to pay down the deposit of your rental property, that portion in your home loan, if it's done correctly, is tax deductible. Only the interest, nothing else, right? And then you move on to the interest on your own rental property. So, for example, if you've got a rental property that's worth $500,000 and you've got a loan of perhaps $300,000 or $400,000, the interest on that $300,000 or $400,000 is tax deductible. Again, only the interest is tax deductible, nothing else, not the principal that you take out from your home loan, not the principal that you have sitting in your property mortgage account. It's just the interest that is tax deductible. And the next thing is, if your property is less than 40 years old, so if it was built in the 2010s and right now we are in 2026, you can claim a special type of deduction, which is a depreciation report on your property, which means that your property was built in the past 40 years. You can claim a deduction, which is a depreciation on the building component of your property for the next 40 years. But please remember that land never depreciates. But what depreciates is the building, which is why you've got the 40-year rule. Now, for example, we were talking about the roof earlier. So if you went ahead and updated the roof on your property, now you can claim the money that you've spent on the roof of your property as a capital deduction over 40 years. So it is effectively going to take you a bunch of years to be able to, get that money in terms of a capital works deduction. But it takes and the reason for this is because ATO does not want you to claim a deduction when you are updating and renovating the property. They only want you to claim a deduction for things such as maintenance, like I said, pest control or smoke alarms or, a repair to the cabinet and things like that. If you go ahead and update the whole kitchen, that's not tax deductible immediately. It's deductible over a period of time. Now, talking about the borrowing cost, and a lot of people really miss out on this, which is if you have to pay LMI to be able to purchase your property, you can deduct the LMI component that you pay over 5 years of the property that you have. So, for example, if you pay, for example, $2,000 in LMI, over the course of, 5 years, you can deduct that in your tax return, but you cannot claim the full $2,000 immediately. So that's something really, really important that you need to think about. Now, with different items that you update, going back to the updates, with different items that you update in the property, you may be able to depreciate them over a shorter period of time. So for example, if you get an aircon in your property, you don't have to depreciate it over 40 years. You can depreciate it over a small period of time. What depreciation means is you cut down the expense into little chunks over a period of time. So for aircons, and accountants know this really well, so it's really important that you get a good accountant on your side when you're doing, when you have a property so that you can get a good tax return, is that, for example, if you're looking at air cons or things of that nature, it will take you a few years to depreciate them, and every item has a different useful life based on ATO's guidance. What I mean by useful life is the amount of time that ATO thinks it's reasonable for it to pretty much stay running. And that's pretty much most of the deductions that you can cover. Those were the broad categories, but if you've got some specific deductions, definitely reach out to us. We'd be happy to support your tax returns, especially in the property space. If it's your first property or your 15th property, we've got clients who have properties who are starting out on their property journey and their investing journey. And we've got clients who definitely are well on their way in their property journey. So feel free to reach out. My name is Alesha Masood, and I'm a partner at Tax App Accountants. And hopefully this video was helpful for you.